right, good afternoon, good evening, and welcome to the March 2016 Live Omega and Hint training call. Tonight is a little different, and I've opened it up to a general invitation to folks on a couple of my other lists, and I know my good buddy Brian Mira has shared this information with some of his friends as well. And the reason being is that there is some new stuff going on that if you're not careful, if you're a seller of an investment property, particularly if you're a seller that does maybe 1 or 2 closings a month, you are a target for a new type of scam and ripoff, and you've got to be prepared. You've got to take preventative actions, and we're going to go into that by the end of the webinar. But before we get started on that, we're going to cover some of the other things that have really changed the landscape when it comes to selling real estate. And that is, we've got these whole new rules out there for when people borrow money from banks. I was reading today, and I saw that one survey showed that banks have reported a 60% decline in lending revenue for when they sell when they're originating a loan. I want to get this exactly right. I'm going to get this exactly right. I'm going to pull this article up. Okay. Lender production profits down 60% thanks to the new TRID. The new Truth in Lending Disclosures rule is being blamed for a sharp decline in the per-loan profitability of the mortgage lenders. The Mortgage Bankers Association say that its fourth quarter survey, blah, 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 basically they're not making nearly as much money because it's a lot more complicated to do these types of closings. So we need to know what it is, because we're going to be selling houses to people who are going to be getting bank loans to buy. So it's time to get us trained to what we can expect and do that. And there's no better person that I know to talk about these kind of deals, talk about the title and escrow aspect of it under the new rules than my friend, I should say my longtime friend, and my business colleague, good friend of mine, Mr. Tim Lehan. Tim's sitting here next to me tonight, and Tim, go ahead and say hello.
Good afternoon, everybody.
So, Tim, I'm going to embarrass you with a quick question. How young were you when you started to learn how to do title searches?
Oh, about 10 or 12 years old.
And so you've been doing title work for, what, a couple of decades now?
I have, yes.
All right. And you currently have your own title company, correct?
Yeah, I'm a partner in 2 different title agencies.
And you're here in Northeast Ohio, right?
Correct.
In fact, I'm a minority partner in one of those title agencies, in full disclosure.
Yes, you are, sir.
All right. And routinely, on a daily basis, how many counties are you guys doing deals in, closing deals in?
About 12 counties in Northeast Ohio.
On a daily basis. How about on a weekly or monthly basis?
Probably at least 20.
Okay, so 20 out of the 88 counties you guys are routinely closing deals in. Would it be fair to say that you are one of the biggest title operations in Northeast Ohio?
Yes.
Would it also be fair to say that you're affiliated with some of the bigger title operations in the greater Cleveland area?
Yes.
Okay, so from that perspective, folks, we're bringing it to you live and real about what's going on inside the title and escrow world as it is. So let me go ahead and march through some slides and make this thing come alive. All right. So I think we've all, unless we've been living under rocks or living in caves, we've all now heard about the Consumer Financial Protection Bureau. What some of us are still figuring out is that now all of the laws regarding real estate closings are now regulated by the Consumer Financial Protection Bureau rather than HUD. And so that means a lot of things have changed, and we're going to go into some of the things that have changed and how that impacts us as we're selling stuff. And this is just more of the wonderful, awesome, destructive stuff from Dodd-Frank. And I'm going to try and be polite here and not say it, but CFPB regulates a lot of stuff, folks. They regulate a lot of stuff, and you notice this is a presentation that we've gotten from Fidelity National. By the way, Tim, to Fidelity National, who are they?
Well, they own Chicago Title corporately, headquartered out of Jacksonville, Florida, the largest market share title underwriter in the United States. Fortune 500 company.
So that's where we've got this data from. So we presume it to be pretty accurate. I'm going to quibble with a few things that I've seen in this slide deck, and we'll go through that. But CFPB regulates a whole lot of stuff. Bank accounts, credit cards, credit reporting, debt collection, mortgages, money transfers, and more. So when did all this chaos start? Well, for any residential loan originated after October 3rd. So, Tim, we're probably now to the point where there's nothing that's been originated pre-October 3rd of 15, right?
We've all looked themselves through the system for the most part.
Or they've died, crashed, and burned. Okay. So everything going forward from now is covered under these rules. And, folks, these rules are different. And one of the things that gets everybody's attention is the penalty for violations of the Federal Consumer Financial Protection laws. The Bureau, not the Federal Bureau of Investigations, but the Consumer Financial Protection Bureau, can bring an enforcement action against them, which could result in the person or company having to pay a civil penalty ranging from a measly $5,000, yeah, I know, that's a lot of money in my world, to $1 million. Yeah, that's a whole lot of money. And that's a sum that will get a bank's attention. That's a sum that will get a local bank's really earnest attention. Okay. So, what types of transactions are affected? The new rules and the new forms apply to all closed-end consumer credit transactions secured by real estate other than reverse mortgages. Purchase money, refinances, 25-acre and less, vacant land, construction only, timeshare. So if you're going to buy a house to live in it, if there's a chance you're going to live in it, it applies, right?
Yes, sir.
All right. So transactions that Fidelity National says are exempt. Reverse mortgages. Well, reverse mortgage isn't a purchase. Home equity line of credit. That's not a purchase. Chattel dwelling mobile home only loans. I'm going to kind of disagree. I think Dodd-Frank does have some pretty strict rules there. And then it also says creditors who originate less than 5 loans in a calendar year. I'm going to change that 5 to a 3. I think that this stuff applies to anybody with 3 or anybody with more than 3. So 4 on up, I think these things apply. I'd love it if it was. I'd love to see that 5 change to 50, and I'm working on that. But we'll leave that alone. That's a whole other conversation. I know that if I got any of my friends from Note School are on the call tonight, they'll know what I'm referring to when I say we want to take that 5 and change it to 50. Or maybe 500. Okay, transaction types that are exempt continued. Portions of TILA and RESPA governing reverse mortgages are not being replaced or deleted. Creditors will still be required to issue a TILA, good faith, and those types of loans. And then settlement agents were required to use a 2010 HUD-1 settlement statement to close those types of loans, and so on. So the HUD-1 is pretty much gone, right, Tim?
Yes, sir.
So more in the passing of a HUD-1, folks. I just did a cash transaction last week. I didn't even get to have a HUD-1 for that, not even for old time's sake. So let's talk about what are the new forms. And Tim, why don't you start to explain what are the new forms and what are we now looking at?
Well, the good faith estimate and the truth in lending form are gone, and now we have the new loan estimate form. And that needs to be delivered no later than 3 days after loan application.
Now, hang on a second. I see 2 forms are now replaced by 1 form. Isn't the reduction in paperwork a good thing?
No, I'm not going there, but definitely within those 3 days, we are very busy. Particularly with the local lenders. Within 3 days of us getting that lender order telling us what the loan amount's going to be, what their escrow loan requirements are going to be, we are getting back to the lender with what the title charges are going to be so that they can make that new loan estimate as accurate as possible.
All right, so I want to just check to make sure we're sounding okay. Boy, we've already got a bunch of questions coming in here. Volume not too good for your guest. Okay, well, we'll lean in a little tighter. We can hear you, Jeff, but not the other guy. Okay, Bob, thank you for that. Well, we're going to work on that. Okay, so we've got the banks now have got to give the consumer borrower a new loan estimate within 72 hours of them making the application?
3 business days.
3 business days. Okay. So they need data to populate a lot of parts of those forms, right?
Correct.
Where do they get that data? But by calling up the title company that's going to close the deal going, hey, how much for this? How much for that, right?
Yes, sir.
So that has you guys doing a lot of work at the front end of a deal that may or may not close.
Yes.
So after there's the hurry and scurry in that first 3 business days, and then the lender is able to get that new loan estimate out, what happens then?
There's a big lull until the end, and then it's hurry up and wait until the end, and then we're scurrying again.
So we'll get into that. Now that the HUD-1 has gone away, and we've got this new closing disclosure form. What's that all about?
Well, it's 5 pages, and it has the truth in lending compared to what fees were quoted and what it is actually at the end, and it looks a lot like the old forms, but it's now the 2 combined.
Okay. All right. So let's talk about the loan estimate. The first form that they've got to get out within 3 business days. They're required to give consumers the new loan estimate, and it's got to be within 3 business days, and it replaces the early truth in lending and good faith estimate. Does it provide more information to the consumer about the cost associated with the loan?
Very similar to the truth in lending.
Does it promote comparison shopping of services?
A little late now.
Well, yeah. I mean, it's a little late now because now they're within 72 hours of applying for the loan, and they got to have data from somebody. So you're kind of like locked in, aren't you? I mean, I don't know any other way. I mean, we can't go change to a different title company that might have a cheaper escrow fee. I don't know. Okay. So then the closing disclosure. So all lenders are required to give consumers the new 5-page closing disclosure, and then received by consumers 3 business days prior to consummation. Somehow or other, I got a feeling that there's something quirky with that 3 business days prior to consummation. I think we've got a flow chart a little later, right, Tim?
Yes, sir.
Okay. So then we've got this replaces the truth in lending in the HUD-1 and discloses many terms and provisions of the loan, but also the financial transactions of the closing of the sale. Okay. Well, that's fine. I'm all about telling things. Lines numbering on the HUD-1 that we're familiar with have gone. Instead, the fees and charges are placed on the closing disclosure in one of 7 areas. Origination charges, services the borrower did not shop for, services the borrower did shop for, taxes and other government fees, which seem to go up and up, prepaids, initial escrow payment at closing, and other. What kind of stuff can get buried in other, Tim? All sorts of stuff. That's fine. That's fine. So, I mean, are there services that the borrower did not shop for? What is that referring to? Okay. All right. That's fine. That's fine. Not sure about these things. Okay. So the borrower is going to likely receive more than one closing disclosure, since the buyer-borrower will receive a closing disclosure several days before the closing, and likely a few days before the walkthrough on the property. Borrowers are likely to receive new adjusted closing disclosures at the closing, showing any changes that occurred between the initial disclosure and the closing, including adjustments through the time of the closing, walkthrough adjustments, and other matters. But changes may not end there. CFPB mandates that changes in financial disclosure numbers, i.e. changes in recording fees, in any amount, must be redisclosed even post-closing.
We're seeing very little of that. For the most part, we're going back and forth multiple times before the lender is delivering. So,
well, is that because pretty much the costs of recording are pretty well set and we know what they are?
Yeah, and they don't want to go through a number of days to redisclose and delay this thing any more than it probably already has been.
So let me ask from this perspective, Tim, is this making it easier for your title and escrow businesses or not?
No, it's not easier. According to the National Association of Realtors, they've been polled. It has added roughly 8.8 days, according to their survey that they took to the process. So it's lengthening the process. and we're seeing that we're spending anywhere between an additional 5 to 10 man hours on every closing. So reducing our profit margins on our end.
Well, that gets personal because that hurts me because that reduces my profit margins as well. And that makes it more expensive to do real estate, so that hurts everybody on the call who's either buying or selling properties to dealing with the consumer or civilian. And so I'm not happy about this. But the biggest thing that I've seen is lenders that don't get these things done right, canceling and scrambling the eggs and canceling the deal and starting over because they don't want to trigger the penalty and the fines. And then that means that the investor who thought they were going to close on the 15th is now not closing, and the hard money lender who thought they were going to have their money wired to their account on the 16th isn't getting their money, and then the deal that they were going to fund on the 18th has happened to be put on hold, and it's causing all sorts of boomerangs and, you know, what I'm going to call railroad car domino effect problems here. So this is something that you got to take serious and you got to plan for. So Tim, going into it this far, what have you noticed are some adjustments that investors and sellers, the savvy ones, are already starting to make?
Most of the real estate agents that we're working with have, they've written the contracts for longer time periods. So, they've anticipated the extra days needed for closing. So, if you're out there writing contracts, give yourself and the lender plenty of time.
So you're saying probably an extra 10 business days?
At least. I'd go 10 or 15.
Okay, 10 or 15 business days, which is about 3 weeks, 21 calendar days. And then you're looking at probably, are you seeing any sort of like automatic extension language in any of the contracts where if they need to automatically extend yet? Yeah, I've seen a little bit of that out of some documents out of the Atlanta area. I just didn't know if it made it up to the greater Cleveland area yet. All right, are you seeing any other strategies that are effective here, such as investor sellers agreeing to pay more things so that there's less data that has to be transmitted to the lender?
Yes. Not really.
Okay. No. Are you seeing some banks that are got a better grip on this than, say, a local bank?
Your Quicken Loans and your Bank of America, they have their own platforms and they've automated things. They're not as reliant upon us for the data earlier on in the process. But the local lenders are certainly doing fine too. But it seems like the larger institutions are more automated and prepared.
Now, Tim, you personally pride yourself on the relationships that you've built and maintained with local lenders and top quality real estate agents. Have these new rules stressed or challenged those relationships in any way?
It hasn't stressed the relationship. It's just, it's just lengthened the process. Everybody's waiting to get paid.
Waiting to get paid. Yep, waiting for my money. I got you. All right, so let's move on. Title fees may need to be adjusted at closing and explain. What's this about? Some of the new loan estimate and servicing require any listing of settlement services and so on. What's going on here?
Well, the way we need to show lenders' policies of title insurance, here in Northeast Ohio, well, in this area, the buyer is paying the lender's policy premium, and there's a simultaneous issuance discount. So on a $100,000 house, the owner's policy is title insurance, $575, is typically split 50-50 between the buyer and seller, and the lender's policy premium is only $100. Well, the way that they want it shown on the closing disclosure, we show a full rate lender's policy premium with a credit. So it kind of confuses the way that the fees are shown. It makes it really confusing to a borrower.
Okay. Now, when the borrower is confused at closing, who has to explain all this?
We do.
And are you capable of doing that with knowing that it's somebody else's communication of your fees? How's that working out?
I mean, it's working out okay. It's just explaining that this is the way the government wants it shown. So most people understand government forms a lot of times don't make a whole heck of a lot of sense.
All right. Okay. Well, I mean, that's a good explanation. And a lot of people are used to that, and they'll take it. All right. So who's going to be responsible for preparation of these new disclosure documents? I think we've already talked a little bit about that. But here's the thing that I think is really important on this top line. Tim, explain the significance of the statement that the lender is ultimately responsible.
Because of those big fines that we talked about earlier on in the presentation, the lenders have chosen, for the most part, to prepare the closing disclosure and to deliver it to make sure that they don't incur any of those large civil penalties that we talked about.
Okay. So now the lender also allows the rules also allow the lender to delegate some or all of it to the settlement agent. Do you see much of that happening?
Not a whole lot, no.
Okay. All right.
You know, we are responsible. We prepare the closing disclosure for the seller, which doesn't have any of the lender's fees in it. But on that buyer side, the lender is preparing and delivering.
Okay, so let's ask this important question. I got a cash deal. Are these rules going to cause me any heartburn or loss of sleep at night?
No changes.
No changes. So I don't have to worry about it. Cash deals are great. Cash buyers, welcome them with open arms and hug them hard, right?
Correct. Yeah. Instead of the integrated closing disclosure, you're going to have an ALTA settlement statement, which is, you know, fairly similar to that HUD-1 settlement statement. So.
Okay. So good news is, in response to some of the questions I've already seen, cash deals are not affected by these rules. Now, the other thing that's not affected by these rules is if it's an investor purchase. Remember, you've seen the term consumer many times, okay? The end buyer, occupant, residential owner, consumer is who's protected by these rules. So if you're selling by cash to a cash buyer, fantastic. If you're selling to a investor who's getting a hard money loan, these rules don't apply. You're selling to somebody who's coming in with an equity line of credit off of one of their other properties to pay for this thing. These rules don't apply because they're not they're not buying for their end use. So we're good there. All right. So that's a couple of really nice nuggets. Now we've got some other things here. What's this that the borrower must receive a copy of the closing disclosure 3 days prior to consummation, which is most often interpreted to be the date of the signing of the loan documents?
So it's very similar to, you know, the refinance 3-day right of rescission type scenario. So you have 3 days to look over that closing disclosure. Now, where it gets a little dicey is when do those 3 days start? And that all depends on how the lender is delivering that closing disclosure. Are they emailing it? Are they snail mailing it? Are they hand delivering it? If it's hand delivered, it's 3 days from then. We've got some slides here.
Okay.
If it's emailed, in the government's infinite wisdom, they look at that the same way as snail mailing it. So you presume it takes 3 days for an email or a snail mail to get to the consumer, and then there are 3-day reviews from them. And again, these are business days. So if you got weekends or federal holidays, it's extending it out even further.
All right. So let's take a look and see if we can there's that closing disclosure delivery timetable. There's some stuff in here you want to walk us through, Tim, that we can understand. Like, are Saturdays business days?
Yes.
Okay. But Sundays are not business days.
Correct.
But what if Monday's a federal holiday? Then that's not a business day, right?
Correct.
Okay. So then we've got the 3-day delivery period. So they assume that if it's other than hand-delivered, it's going to take 3 days to get there, whether by mail, email, fax, carrier pigeon, whatever. I was joking about the carrier pigeon, folks, okay? And then there's the 3-day waiting period. So it really is a 6-day, because a lot of people are instinctively checking their email every 15 seconds, unlike me. Some days I'll go 2-3 times. Sometimes I'll go 2-3 days without looking at email because I'm so busy. Yeah, for those of you that email me and are wondering what I'm doing, I'm working hard on other things, so I'm not looking at email. So you know, you could have literally a 6-day period for the guy who has all of his mail come right to his handheld device and has always got his nose stuck to it. And then you move into the first day signing closing may occur, and then you've got the right of rescission, but only on refinances. And then you've got the first day that disbursements may occur on most refinances. So when can disbursements occur on something other than a refinance? The day of closing. Okay. All right, so let's do this. I like this slide for a couple of transition reasons. I'm going to go through here and see if we've got any questions that relate to what we've covered, because there's some, when we start talking about disbursements and disbursements of the money, that's where everybody should really start paying attention, okay? So if you're thinking about tuning out, maybe going to watch something on TV, don't do it. Don't do it. This is where you need to pay attention, because if you've got a property that you think you're going to be selling and you want to make sure that you get the money rather than some hacker, you better be paying really close attention to what Tim's going to share with you in the next little bit. But I'm going to just run through and see if, with current questions, if there's anything that we need to address. Okay, Elizabeth, it looks like your question is off topic. If it's a cash sale, will there still be an extension amount of time to close? Probably not. Carol, probably not. All right, I think we fixed the sound issue, Bob. Thank you for that comment. Okay, Brett, same thing. Okay, here we go. Okay, how do we get Hint and Omega questions answered? I've tried several times using Jeff email and the support on the email site. You need to send it, if you're not getting them, if you're not sending them to jeffw@realflow.com, then, and you're not getting an answer to that, then I'm not sure what to tell you, because that email account is checked on a regular basis. And I guess the best thing to do then would be go to my blog, watsoninvested.com, and contact me through the form there, because I am just looking for the charging order clause. Well, the charging order clause is in the operating agreements that are inside the Omega system, if you know where to look for them. I'll be happy to show you. All right. Okay, so Vita, I know what you're looking for, and if you and I can just set up like 20 minutes or less to talk about it, we'll get that done. All right, so that was all those questions there. Now I'm going to pull up something different on the screen. I just want to make sure we don't have anything else. Here we go. Okay. Oh, yeah, you know what, Tim? Let's clarify this thing. What is closing versus consummation?
Well, consummation is the day that all the loan documents are signed. And, you know, the closing date is the date where everything is filed and ideally disbursements are made on the closing date.
So when you say filed, you're talking about presented for recording at the recorder's office where the mortgage and the deed are bang, bang, stamped in?
Yes, sir.
Okay, all right. And then consummation is the day that they sign it, but then sometimes you may sign before the money's wired or out and so on, right?
Yeah, in our office, usually consummation and closing and disbursement are all on the same day in an ideal world.
Well, I got you. I appreciate that. Okay, so let's pull up a couple of important forms that we need to cover here, and I'm going to just see if I can get them up. There we go. And what we've got here is a couple of bulletins from the FBI. And what we're going to do here is show you email account compromise. Tim, why don't you walk us through this one, and then we'll move into the next one, which is, there we go, the email account compromise and what's going on with this. And you know, tell us as much as you can without any embarrassing, gory personal details of anybody that you might know.
Well, I've attended quite a few underwriter seminars and conferences in the last few quarters, and the by far the largest fraud scam going on right now are folks out there trying to steal sellers' proceeds. Okay. Now, some of the largest targeted people are sellers that handle a lot of transactions, just because it's really easy to find out who they are, who they close with, and typically what we're seeing in every title underwriter is reporting that they are there's attempted perpetrated fraud against all of them on a daily basis, whereby hackers and fraudsters are either hacking into people's Gmail accounts or Yahoo accounts and trying to misdirect their sales proceeds to the fraudster's bank account as opposed to the seller's bank account. So if you're getting a wire out there, you want to make sure that you're talking to your escrow officer and making sure that they're sending it to the right account, because these people are setting up spoof email accounts. So if it's Jeff Watson at gmail.com, they're creating Jeff.Watson123 at Gmail, getting a hold of Jeff's usual escrow officer and saying, hey, instead of sending it to Timbuktu Bank, I want it sent to Wells Fargo. So.
And away it goes. And you have seen title companies get hit for this, right? And people have fallen prey to that. Now there's a second bulletin I want to bring up, and that is the business email compromise. And these came out the same day. And is there something different in here you want to talk about? Okay, so there's two different public service announcements pushed out by the FBI warning about how sellers of real estate can have their proceeds taken from them. And you got to think about it from this point of view, folks. Listen to me carefully here. If you're selling multiple properties on a regular basis, you probably have a website out there talking about your business. And that website has a contact me, which has an email address. And if someone is sophisticated, they can go to the courthouse and they can see when your business sells what title company handles the closing. And then they can smurf a phone call to that title company proclaiming to be you and saying, hey, I can't remember which escrow agent's handling that deal. Oh, yeah, can you remind me of Susie Snowflake's email address? And then they send in an email with, slight little subtle changes to it saying, hey, I've just ended my relationship with, First Bank and Trust of, the town, and I'm going to be using now a big national bank. Business is getting bigger, and bang, off they go. So, Tim, there are some specific strategic things that investor sellers can and should do to better protect themselves. And I want to ask you to explain those things in detail. Folks, this is where you take notes. This is where you can prevent yourself from being ripped off of hundreds of thousands of dollars. Tim was telling me before the call began of someone that he and I both know that had this happen to them to the tune of more than $100,000. Not a good thing. This is a title company guy. Managed to get most of it back, but it wasn't easy. So let's go through some of the things that you should do when you're working with a title company, Tim. What are some of the best practices out there now?
Well, here's some questions to ask, and if you have your relationship with your title person, ask them, right now, ALTA best practices.
What does ALTA stand for?
American Land Title Association.
ALTA, American Land Title Association. ALTA best practices. Okay, keep going.
So pillar 3, there's 7 pillars of best practices. Pillar 3 is privacy and information security. So you can ask your title and escrow agent, can I see your best practices? Can I see the section of the 3rd pillar related to what your security and privacy procedures are? How do you physically secure my escrow file? Do you encrypt your email? What kind of electronic security do you have in place? How do you dispose of documents? you know, what safeguards do you have in place for my money? would be all questions that I would ask. Here's some other questions. You know, what does your closing protection letter look like, and what does it cover me against? So you might want to ask to see a sample closing protection coverage. Ask them in their errors and omissions policy, do they have a fraudulent instruction rider that would cover in case your money did get misdirected? Would you be covered? Does the title and escrow agent have a fidelity bond that would protect you against an employee of your title company being complicit in the theft of those funds?
That would never happen, would it? Title company people not being honest? Well, wait a second. I just read several stories about how a person involved with a large title operation in the Dallas-Fort Worth area is behind bars. And a lot of investors are happy. So I wonder what that's all about. So let me ask you explain some things. Because I think a lot of us have heard the term closing protection letter. But let's get into that in a little more detail. What is a closing protection letter? What does it cover? And why do I need it?
Well, in Ohio here, and I can only speak for Ohio. I'm not licensed outside of the state of Ohio.
At the moment.
At the moment. But the closing protection coverage is essentially where the underwriter is ensuring ensuring the closing against dishonesty and fraud of the title agent, and it also covers against the failure of the title and closing agent to follow the closing instructions. So you're the title underwriter that's ensuring the title to the transaction would ensure the escrow closing portion of the transaction. So again, you want to see that it's a major national title underwriter that's underwriting this thing.
Well, now, how many major national title underwriters are there?
Well, right now, you know, typically we talk about the big four. You know, you've got Fidelity, which, you know, is known in this area as Chicago Title for the most part.
Right.
You've got First American Title.
Okay.
And Old Republic Title. And Stewart Title. Those are the big four that are most often mentioned.
And you're an agent for how many of those four?
3.
Okay. And we won't have a commercial here, folks. Okay. So is there more than one kind of CPL out there?
There's a CPL that covers the lender. So if you're a buyer and you're paying for a CPL, you might not even be paying for coverage to insure you. You're covering the lender. So you're allowed here in Ohio to buy coverage that insures you as a buyer and also you as a seller. So for $50, you know, don't hold me to that exact dollar figure, but for roughly $50, you can get coverage that'll insure you as a seller against misappropriation of your funds by an employee of the company or their failure to follow your instructions.
So for those of you that are private lenders, for those of you that are hard money lenders, for those of you that fund other investors' deals, when you do that, you insist that your borrower pay for a CPL, closing protection letter, that covers you as the lender. This is over and above and in addition to your lender's title policy that may be issued at the same time as their own owner's title policy, but you want these protections. Now, Tim, let's ask a couple other things. Let's ask about E&O policy. Do we want to push the title agent and say, listen, you know, Mr. Title and Escrow Agent, tell me about the level of your E&O policy. Do we push that?
You can ask for a copy of their declaration page showing who the underwriter of the errors and omissions policy is, what's their deductible, what's the amount of coverage per claim, you know.
Now, if you ask for that, and you know, I mean, is that going to cause somebody to get nervous or upset with you?
You know, I think if you frame the question in context of, hey, I've heard a lot of people have been getting hit and they've had damages in closing, so you're just doing your due diligence.
Okay. So now the next thing I'm going to ask you about is the cybersecurity policy. Is it fair to say, instead of asking what is their cybersecurity policy, to say when's the last time you updated it?
Yeah. Do you have a policy in place that if your system gets hacked and my social security number gets stolen from you, do you have something in place that's going to protect me?
Okay, so these are, folks, these are important questions that you need to be asking on these deals, particularly if you're having the funds from your closings wired to you. Yeah, I just realized that I had my screen paused for a long time, and so people weren't seeing the FBI public service announcements that I had up here. But there's two of them: an email account compromise and the business email compromise. And if anybody wants these, they're available by going to the FBI's website, or if you can't get them any other way and you want to shoot me a quick email, go ahead and do that. We'll get them to you. I've got them as PDFs. But I want to just push this a little bit further here. Are there things that the title companies, the title insurance companies, are there things that they've done to better protect since the rise of these fraudsters that come out there figuring out how to pretty sophisticatedly take advantage of an investor's marketing system and email accounts and, kind of spoof and fish their way in and steal the money?
Yeah, I mean, we've put in place policies whereby we don't take just simply emailed instructions on wires for sellers. We do voice verification, and if I'm you and I'm a seller, I would definitely, ask that question and insist that, hey, call me, verify where you send my money before you send it. So.
Yeah. Well, I mean, I went through this last week where it's true story. I'm sitting in the title company's office. I give them a bank account number for depositing the money, not wiring it, depositing it. And I give them the wrong bank account number. I gave them another one of my business's numbers, not the one I really intended it to go in. Well, you can imagine my surprise that the money wasn't in the account that I thought it should have been in. Ruh-roh. Call the title company. The escrow agent gets right on the phone, calls me right back in a couple of minutes, and we go over it, and they read off the account number, and I go, yeah, that sounds like mine. Let me check to see which one it is. And lo and behold, through a voice verification conversation, verified that I gave them the wrong account number. I gave them for XYZ business instead of ABC business. But the money went to one of my accounts, so nothing was wrong there. And it was just, I could simply correct it at the bank the same day. But it comes down to knowing who you're talking to and them knowing you. And if you're going to change anything, if you still want your money wired to you, make sure you voice verify when the wire's going out and what account it's going to. And, get it that way. Some of you guys want to, I watch some of these people who talk about how they never go to their closings when they sell. Hey, God bless you. That's fine. If that's the way you want to be, that's great. Cool. I'm not so sure I'm going to be that way. I'm going to be involved to know that everything went right. I'm going to be involved to know that they know where they're sending the money. I'm going to be involved in making sure that somebody at the title company who is competent is handling these things. And I want to have it there. Now, let's ask this question, Tim. This has happened several times. So much so that the FBI has put out some warnings on it, and from inside sources that it's happened to title companies. What happens to the title company if they get scammed? What happens?
Well, if you're dealing with a smaller title agency that's handling 5 deals a month, they probably don't have the funds to write a check from their operating account to cover your funds that they misdirected. So you might want to deal with a larger title agency, that has the coverages in place and the financial strength to, God forbid something were to happen to your proceeds, that could fund $100,000. Your mom and pop title agency with, 2 employees total, it's a guy and his wife working there, they probably are not going to be able to fund your shortfall if the money's taken. And I know for me, our title agency spends over $20,000 a year in coverages to protect against things like that. Your small agency is not going to be able to even afford the coverage.
Right, and that to me, one of the things that I'm seeing here, not only as a result of the need to protect your business, but also because of the rules that are out there under the Consumer Financial Protection Bureau now, and some of the other things, folks, the smaller and smaller title companies are having a harder and harder time hanging on. They don't have the volume to support that, okay? They don't have the volume. They've got to do something to pull it up and they've got to find it from somewhere, and they're not, because they don't have the volume of transactions. So I'm going to suggest to you that you've got to start asking the questions and verify that they've got the ability to do these things and get it done. Now, a title abstractor is like the title insurance company. We're talking about who handles the escrow. Okay, Tyrone, great question. NPA title abstract companies are the norm. What do you recommend? Tim, you have any comments there?
I know in Pennsylvania a lot of times, it's mostly an attorney-closed state, so you can ask that of, a lot of times it's the attorney that owns the title and abstract company, and they might be doing the settlements through their
trust account.
Their trust account. So, you can ask them. They should have similar coverages to what I'm talking about here.
Yep. And the other thing that you got to think about is this. You want to make sure that they're set up to handle that volume. If they just tell you, oh, I've got a malpractice policy in place, that concerns me, because that malpractice policy is generally going to be $1-2 million, and then it's exhausted. So a couple of screw-ups in a week's time could really take a dent into those policies, particularly if you're talking about a larger transaction or, God forbid, a commercial deal with a large chunk of money involved.
And it's good to have all these policies in place, but at the end of the day, an ounce of prevention is worth a pound of cure. If you're asking these questions and they're giving you good answers to the policies that they have in place, that's a big thing.
So let me ask this question, Tim, because it's a great question that came in off the call. How much should we expect closing costs to increase due to all of these changes, both CFPB, TRID, and extra security and protection?
In Ohio here, Northeast Ohio, escrow fees at the companies that I'm partnered with, we've raised our fees roughly $15 to $30 per side to cover our additional costs to be compliant and to provide you the extra coverages, to make sure that you're protected and we're protected. So, it's pretty nominal charge. But for us, we've invested in the last 18 months, we've invested well over $100,000 to make sure that we're compliant and that our consumers are safeguarded.
So now, is that $60 a deal? Is that just for protection, or is that also TRD and CFPB compliant?
Both.
Both. So let me see if I got this straight. You figured out that it's costing you about 5 extra work hours, staff time-wise, per deal, and you've only been able to raise the fee by $60. You and I are losing money, brother.
We are, and the marketplace has kind of dictated that. I don't think we raised prices enough, but we don't want to wall up the consumer too bad.
Okay, I got you. So another question is, if the lender doesn't adhere to this procedure, what are the potential consequences? In a consumer transaction where the lender doesn't follow the procedures outlined under the CFPB rules, they could face a penalty of anywhere from $5,000 up to $1 million as a result. It's a civil penalty. And no one's going to go to jail. The government agency just gets more money for its own spending purposes, and the bank has to pay it. So it's really, I don't know how the consumer gets any of that and is benefited, but anyhow, okay? Saturday is defined as a business day, yes. What about other parts of the purchase contract? Promissory notes. I don't understand that part of the question. Saturday is a business day, I got that. What about other parts of the purchase contract? I don't know, sorry, I don't understand that question. Ron, buddy, I don't understand that question, okay? Is this being recorded? The answer is yes, it's being recorded. Do the new deals affect cash? No? Okay, great. Let's see where we are. Okay. Does this apply to private lenders? Well, what we've talked about in the last few minutes does apply to private lenders. You need to make sure that you as the private lender have verified where your payoff proceeds are coming to. You need to make sure that that doesn't get lifted from you, because if you're running a private lending business and you've got an email address and they figure this out, they could try and spoof your email address and say that they're changing the wiring instructions on you because they don't want to go back to, you know, Bo Diddley Dunk Bank. Instead, you want to send it to bigger and better shiny bank. You got to watch out for that. Now,
California and Nevada, the last conference that I was at, they said in California and Nevada that is being tried currently, misdirecting payoff funds. So.
Misdirecting payoff funds to private lenders. It sounds like a scam. Now, for private lenders on consumer deals, these rules apply when you're going 3 deals and higher in a year, in a rolling 12-month period. In a consumer deal, in a business deal, a commercial borrower, an investor borrower, the CFPB TRID rules do not, repeat, do not apply. This is one of the reasons why all the loans that I do as a private lender are to LLCs that are buying, because LLCs cannot be consumers. Okay? An LLC can't be a consumer, and a consumer can't be an LLC. So, you know, that's the way I do my transactions. Great. Okay. Now, there's a question. Other clauses state that business days has business days been redefined for all contracts, default notices, cure periods, etc. Great question, and I would say the answer is no. I would tell you that what I would do, and this is me as a draftsman now coming in saying that I would define what is a business day in these terms. And a business day would be any day that the courthouse is open, which means Saturdays are not included, Sundays are not included, state and federal holidays are not included. Any day that the courthouse is open is a business day. That's how I would cover it. But, you know, under the federal rules for Consumer Financial Protection Bureau, they define it, you know, pretty much any day that the bank is open, you know. And if the bank is open, but then there's some bank branches that are open on Sunday, so that's kind of interesting. So, Ron, now I understand your question. It's a great question. All right. Does CFPB regulate loan modifications? I don't know the answer. I don't know the answer. I don't know. I wish I knew. I don't. Okay. Email address for hint support, try Jeff W, Jeffw at RealFlow, RealeFLOW.com. Jeff W at RealFlow, RealeFLOW.com. Try that email, okay? A lot of people forget to put that second E in RealFlow, okay? Cool. All right, folks, we are coming up really hard and fast at the top of the hour. Going to look to see if there's any last questions that have slid in. Doesn't look like it. Tim, I just want to tell you thank you so very, very, very much for being here. Thank you for sharing this information with us. And I want you, if you can do this. I know you're looking at the watch. Got to get going here. But if you could just recap the definite must-do action steps that investors and private lenders should take to make sure that they get their money sent back to them if they're choosing to receive their proceeds by wire? What are some of the things that they need to do?
Your escrow officer is your best friend. Get a hold of them. Make sure that they know that, hey, I'm not going to send you any new emails telling you where this money is going. Voice verify with me where you want, where the funds are going. Make sure you have that conversation with them. Go into the office, close with them. You want to have a great relationship with that escrow person. That escrow person is going to make your life and your closings easy. So make sure that you talk to them. Make sure that all wires and proceeds are voice verified. Have a conversation with your title and escrow agent to make sure that they have the right policies and procedures to protect your information, and that they have the coverages and the financial strength to cover any potential misdirection of funds.
So am I allowed to give small gifts to my escrow officers at closings, like an Applebee's or a Chipotle or a Starbucks gift card? Am I allowed to do those kind of things?
Absolutely.
Is that appreciated?
Absolutely, yes.
Okay.
Yes.
So if I do that, if I can create that kind of relationship where they know every time I close a deal with them, they're going to get a $5 or $10 Starbucks gift card from me, you can be certain that they're going to be paying more attention to my deals, and you can be certain that they're going to understand that we've got this. So this will be great. Will all listeners be able to get the recording? There's been a lot of info here. When people tell me there's a lot of info here, that just makes me so happy because I strive to deliver content. Yes, I'm going to make this thing available. It's going to go up on my blog. We're going to put this up on my blog. It probably will take a couple of weeks to get there. But yes, it's going to go up, Gene. I'm glad you asked that question, and thank you for the compliment about a lot of the info that's here. We're going to get this thing it's been recorded. We're going to get it up and over to my web guy, but he's working on a couple of big projects y'all are going to hear about. Thank you. I'm glad we over-delivered. I'm glad we under-promise and over-deliver. Tim, I got to tell you, buddy, thank you for being here. Thank you for talking us through stuff. And, folks, I want you to understand, here's a guy that could be home with his family into the brand-new house that he just got done having built and getting all moved into, but instead he came over to my office. We spent an hour and a half now talking about real estate and deals, and Tim and I have been doing stuff together for 15 years now, and it's been a pleasure, and you can understand why I like doing this stuff, guys. I get to hang out and work with great people like Tim, so thank you so very much.
Thank you, Jeff.
All right, so folks, this is going to wrap the call up for tonight. It's 8:01 where I am, which means it's the top of the hour where everybody else is. I want to tell you this right now. Thank you so much for being on the call. If for some reason you don't regularly get my emails, do me a huge favor. Head over to watsoninvested.com. watsoninvested.com. Register to get on my email list, and you'll have a chance to learn about a lot more of these things. watsoninvested.com. God bless. Good night. Peace. We'll be talking to you.